Hey guys, it is Julie here with JT Wealth. In today's video, we're taking a look at a few of my favorite Canadian stocks. So let's get into it. Alright guys, welcome back and thank you so much for being here. Today we're taking a look at a few of my favorite Canadian stocks for some great long-term growth. Now, for anyone who doesn't know, I do live in the USA now, but I am a Canadian. And I do often get asked to cover some Canadian stocks since some of the companies I regularly talk about aren't available on the Toronto Stock Exchange. So today, all four companies that we're looking at are Canadian and trade on the TSX. But don't worry to all of the American viewers, they are also available on American exchanges. Just before we get into these companies, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the great links in the description. If you're looking to start a new investment account, make sure to check out Webull, as right now they're giving away 2 free stocks worth up to $1,850 for opening up and funding a new investment account, so check them out. Keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant to bring some new companies to your radar that you can then do your own research and due diligence on. Now, with all that being said, the first Canadian company we're going to take a look at is Enbridge. They trade under the ticker ENB on both the Toronto Stock Exchange and the New York Stock Exchange and are currently at about $44 per share. They also pay a very healthy dividend with a yield of 7.59%. The Enbridge stock comes in as a strong buy with 11 current analyst ratings. With that strong buy comes an average price target of $52.09 Canadian for about an 18.4% potential upside over the next year. Looking at a breakdown of those ratings, the lowest price target is about $49 per share for about 11% potential upside, and our highest price target is $58 per share for over a 31% potential growth. Enbridge's vision is to be the leading energy delivery company in North America. They operate across North America, fueling the economy and people's quality of life. They move about 25% of the crude oil produced in North America. They transport nearly 20% of the natural gas consumed in the US, and they operate North America's third largest natural gas utility by consumer count. Enbridge was also an early investor in renewable energy, and they have a growing offshore wind portfolio. Enbridge has a best-in-class infrastructure franchises, resiliency and longevity of cash flow, a transparent long-term growth outlook, along with a growing investable free cash flow and strong balance sheet. In 2020, they had $1.6 billion of capital projects placed into service. They increased their ESG goals for emissions, diversity, and inclusion, and preserved financial strength. It is worth mentioning that they have been paying their dividend for 66 years, and they've also been increasing that dividend at a compound annual growth rate of 10% for the last 26 years. As far as those ESG goals go, one of their big ones is become a net zero greenhouse gas emission by 2050, with an interim target to reduce those greenhouse gas emissions intensity 35% by 2030. And they are working towards that with modernization and innovation, self-power with renewables, and different emissions offsets. The second company we're taking a look at is Barrick Gold. They trade under the ticker ABX on the Toronto Stock Exchange and under the ticker GOLD on the New York Stock Exchange. They're currently at about $28 Canadian per share, and they also pay a dividend with a yield of 1.67%. Barrick Gold also comes in as a strong buy with 10 current analyst ratings, and that is 9 buy ratings and 1 hold. The average price target is $40 per share, which would be almost a 42% potential upside over the next year. And all of the analyst ratings come with some generous potential upside. The lowest price target is $35.50 for about a 26% potential upside, and the highest is $47 for over 66% potential upside. Now, Barrick's mission is to be the world's most valued gold mining business by finding, developing, and owning the best assets with the best people to deliver sustainable returns for our owners and partners. Barrick has gold and copper mining operations and projects in 13 countries in North and South America, Africa, Papua New Guinea, and Saudi Arabia. Their diversified portfolio spans many of the world's prolific gold districts and is focused on high-margin, long-life assets. Barrick has recently received some more attention as a very well-known investor recently started a position, and that was none other than Warren Buffett. Barrick has done a great job of building a durable competitive advantage in its industry, and this is one thing Warren Buffett has talked about a lot in the past in terms of his investing criteria. Barrick's gold reserves make it the top gold company in the world for large-cap, long-term investors bullish on gold to consider. Whether you think gold is undervalued or not, Barrick makes a compelling case right now. Of course, the fact that Warren Buffett has stepped into this Canadian mining company makes the stock look even more compelling. Our third Canadian stock is Suncor Energy. They trade under the ticker SU on both the Toronto Stock Exchange and the New York Stock Exchange and are currently priced at $22.75 Canadian per share. They also pay a dividend and have a yield of 3.69%. And just like our previous two stocks, Suncor also comes in as a strong buy with 11 current analyst ratings. And that's comprised of 9 buys and 2 holds. The average price target is $29.37 for about a 29% potential upside. Our lowest price target is a bit old now at 3 months, and it comes in for just a 1% potential upside. But more recently, 8 days ago, we have a buy rating at $33 per share, which would be about a 45% potential upside. Suncor Energy is an integrated energy company strategically focused on developing one of the world's largest petroleum resource basins, Canada's Athabasca oil sands. In 1967, Suncor made history by pioneering commercial crude oil production from the oil sands of northern Alberta. Since then, Suncor has grown to become Canada's largest integrated energy company with a balanced portfolio of high-quality assets and significant growth prospects, focused on operational excellence with the assets, people, and financial strength to compete globally. In terms of ESG, they are also focused on lowering their greenhouse gas emissions, reducing emission intensity by 30% by 2030. They intend to achieve this by investing in low-carbon power, developing and deploying new technologies, and running operations on natural gas and moving to low-carbon fuels. Suncor boasts an impressive supply chain network, owning significant oil sands and conventional production platforms, along with a strong downstream portfolio with a network of more than 1,500 Petro-Canada retail and wholesale outlets. The company's robust liquidity and modest near-term debt maturities are other positives, and Suncor has an expected earnings growth rate of 122.7% for the current year. And last but not least, we have a company which is actually personally one of my largest stock holdings, and that is the Royal Bank of Canada. They trade under the ticker RY on the Toronto Stock Exchange and the New York Stock Exchange. They're currently at $106.16 Canadian per share and have a nice dividend yield of 4.07%. Now, unlike the other three, this stock does just come in as a moderate buy, and that is based on 5 buy ratings and 3 holds. The average price target is $113.30 per share for about a 6.72% potential upside. Our lowest price target is a hold rating from Scotiabank with an $80 price target for almost a negative 25% downside, but our highest rating actually is another hold from CIBC with a price target of $128 for over a 20% potential upside. Now, the Royal Bank is one of Canada's biggest banks and among the largest in the world based on market capitalization. They're one of North America's leading diversified financial services companies and provide personal and commercial banking, wealth management, insurance, investor services, and capital markets. They have over 86,000 full and part-time employees who serve 17 million clients in Canada, the US, and 34 other countries. They are a market leader across all key businesses in Canada, and their purpose is to help clients thrive and communities prosper and to become among one of the world's most trusted and successful financial institutions. Investors value RBC for its industry-leading franchises and innovative approach. They have over 7.5 million active digital users for over 700 million client transactions daily. But on top of that, they actually have 5 Borealis AI labs connected with top universities across Canada. They have 6 innovation labs globally and 19 RBC ventures in the market. They are making great efforts to expanding beyond traditional banking, as we see a lot of banking becoming more digital and far from the traditional standard. So there we have 4 great Canadian companies, all with some growth potential and all with some nice dividends. I think all 4 of these companies are ones that you can buy and hold in your portfolio for years to come. Now, I know there are a ton of other amazing Canadian companies out there, so I would love to hear from you guys on what some of your favorites are lately. So make sure to leave your thoughts in the comments down below because I always love hearing from you guys. Just remember that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Make sure you're always doing your own research and due diligence before making any investment decision. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. I hope you guys all have a fantastic weekend. Thank you so much for watching, and cheers.